GM, and welcome to another episode of Q&A Between Two Ferns. And as you can see, it's just me and Hugh here today. And of course, our buddy Sam Bankman-Fried over there. But he's finally taken his lawyer's advice and is no longer speaking on any interviews, so we won't be distracted by him today. Anyways, guys, we got a really good Q&A for you today. Lots of really good questions, including this new USDe by Ethena. Is this the next Terra's UST? What's going on in the Avalanche ecosystem? Will ETH continue underperforming Bitcoin? Any top AI picks? And some exclusive new Memecoin alpha just for you guys here today. So, of course, if you do like these videos, please do hit that like button and don't forget to subscribe if you are not subscribed already. Anyways, let's dive right in with the first question. And this is from VEE, and he's asking, could you discuss why Ethena's USDe is a good or bad idea? Yeah, it's gained a lot of, it's caused quite a ruckus on crypto Twitter, lots of comparisons to UST's Terra. It's obviously also exploded in terms of issuance, and there's obviously a lot of concern around it because of these comparisons to previous stablecoins. So I think it's important to first of all clear up some of the FUD or misconceptions and address some of the risks here. So when it comes to the misconceptions, or firstly, don't call it a stablecoin. It's not a stablecoin; it's a synthetic dollar. Right, that's the most important thing. Firstly, and secondly, comparisons to UST's Terra aren't correct because of many reasons around how the mechanics works and the collateral behind it. So we'll come back to that in a bit. Firstly, let's understand how it works and what it is exactly. So the best description of it is a tokenized cash and carry trade. Okay, so what exactly will happen is you will deposit collateral into the protocol, be it STETH, USDC, USDT, any accepted collateral, right? Ethena then will go and stake that collateral, obviously, and at the same time, they will go and open up a corresponding and equal short position to the long position in the collateral, right? So essentially, they are what they term is delta hedging the market risk from the collateral that's stored. So if it's going to be Ethereum and STETH, they are shorting Ethereum in the futures market on CEXs and DEXs and negative 1x. So there's no leverage. It's just a completely offsetting short position, right, in the futures market. So what that means is, irrespective of what happens to the price of ETH, your position will not change from the perspective of the actual collateral position. So there's no market risk from the price of ETH, right? So that's the collateral portion. Now, what that means is, obviously, when they're staking that ETH, you're going to be earning the ETH native yield, right, STETH. And that's one of the components of the yield that's been generated. But the far larger component is what is termed the funding rate, or the carry, in this case, the funding rate, the amount that the longs in the ETH futures positions are paying the shorts, right? And this can be very high in bull markets, right? Lots of longs want to take on long bull positions and they want to go and buy ETH futures in the longs, and they're obviously paying the shorts for that. And this can be why some of the yields that we've seen on in USDe has been so high, and why it's obviously created this, conception of, well, is it potentially like Anchor? Where's this yield coming from? But this tokenized and cash and carry is actually a pretty popular, and it's been a long-running trade in TradFi as well. When institutions will go and they will buy the underlying and they'll place a short in the futures market, they completely delta hedge, so they're not exposed to the price of the asset, and they'll earn the carry on it. So that's exactly how USDe works, and cash and carry is a pretty popular trade. Now, the difference between this and UST is UST, if you remember, operated the mint and burn mechanism, where Luna was, Terra's native currency. Luna was used as collateral, and the assumption was, hey, Luna will have some value of some description. But obviously, as we've seen, there was no real value to Luna. It was just on everyone's perception of what Luna was worth. And the moment that people realized that Luna actually wasn't really worth that much, the whole pyramid fell. Whereas in the case of USDe, the collateral is actual collateral crypto. It's sitting there as Ethereum and stuff. So it's backed by fully liquid collateral that can be sold, and everyone knows what this collateral is. So that's the first comparison. And obviously, in the case of UST's anchor, a lot of the yield, many people thought it was just a marketing stunt to get people to come and deposit into anchor. And their yield some of the yield was from staking and the inflation, but the rest of the yield, people didn't really know where it was coming from. Whereas in the case of USDe, obviously, you know where the yield is coming from. It's from the funding rates on the short futures positions. So that's a few of the misconceptions and the comparisons. However, it is not risk-free. Right, and there are many risks, and credit to Ethena team who have basically addressed these risks in their frequently asked questions, and they're fully upfront about these risks. So one of the risks, of course, is the funding rate. What happens in a bear market if the funding rate goes negative because people want to short more than they want to go long, and there's no longer any of this funding rate they can earn in top of the yield? And what happens if this funding rate becomes even negative to the extent that it even offsets the staking yield? Then you're going to have people potentially losing yield when they're staking with USDe or depositing in USDe. But if you read the FAQ, there's going to be attrition before that happens. They've got this Bitcoin reserve they instituted, which I will admit may have been, especially with comparison to the Lunar Foundation Guard, may have been a bit questionable. But the point of the matter is you have that Bitcoin there to defend in the cases that you have negative yield being generated because the funding rate has fallen so far negative. Also, if you look at historically, ETH funding rates in the futures market for those going long is relatively been quite consistently high, even in other market conditions. But there is the funding rate risk. There's also liquidity risk because you have to consider the fact that the moment you go and deposit collateral in USDe, they have to immediately go and enter short positions to delta hedge it, right? So if the positions are large enough, then they have to go and potentially take slippage risk. There may not be liquidity in the markets to put those positions on. So you may have to take some slippage on that, and that's obviously going to impact on the potential yield. There's collateral risk in the sense that what happens if you have a DPEG from STETH, staked ETH, Lido's staked ETH to ETH. It has happened in the past, although, the DPEG has kind of adjusted very quickly. But that is a risk, of course. Exchange failure. Now, it's important to point out that USDe doesn't deposit the collateral on exchanges. It's held at third-party custodies using MPC technology. The exchanges, what they place on the exchanges are the short positions, right? So if an exchange does fail, the risk there is that the hedges are immediately taken off because the exchange has failed. And if there has been any accrued P&L on the positions, this may have stuck on the exchange, and they need to try and claw that back, or they have to do regular sweeps. But there is still the exchange risk, right? And if all those positions come off very quickly, in a crazy market, meltdown, what happens if the collateral's fallen as well, but the exchange has failed? So there's these risks as well. Custodian risk, obviously, like I said, but the point of these custodians are likes of Copper, Fireblocks. They use MPC technology and vaults where they don't have control over the collateral. Only Ethena and numerous different keys can. And then, of course, if you're going to be depositing some of the collateral with regulated custodians in the UK, it's completely separate from the treasury of the custodian itself. And then, of course, there is withdrawal queue issues as well, because you have the fact that if you are all withdrawing staked ETH from, if you stake an ETH and you put it into withdrawal queue, it can take some time. And finally, there's regulation risk, right? I mean, obviously, Gary and the SEC are ever present. It's a synthetic dollar, but they have blocked all US users. They have to complete KYC to mint and burn, and they're regulated within EU's MiCA. So they've got strong geoblocks going on, but you never know how Gary and his crew will react. So, those are the risks, and they are fully in front with these risks, and no one knows how this thing will react in adverse market conditions, in tail risk events. But the market has spoken. The USDe issuance is going off the charts. In fact, I'll share a chart in the description with you guys about how it has been the fastest growing US dollar denominated asset in history. And of course, there was a lot of excitement around the ENA airdrop, its governance token. So its governance token, I think about 720 million was airdropped to people. And the governance token will be used for governance, mostly for voting on DEX partnerships and things like that. One of the largest holders actually got 2 million in ENA. So it's interesting. And it is definitely not like Terra's UST. A lot of financial wizardry going on. Many people are skeptical. Yes, it's good to be skeptical, but it is also good to go and take a look and understand what's going on. But be aware there are risks strong risks. And the question is, everything works until it doesn't. Let's not forget that in the great financial crisis, people, put CDOs on subprime, on mortgages that they thought were AAA. They did CDS spreads on it as well, thought that it was, a surefire trade. Nothing's going to happen. US house market is sound. And it almost led to one of the biggest financial crises in the world. So, yeah, it always works until it doesn't. But that's Ethena and USDe.
I was trapped inside a cage made out of the daily grind.
I was so unfulfilled. I felt like a blank sheet of A4 paper.
Something was missing from my life, but I didn't know what.
But then I found what I'd been missing.
The Coin Bureau deals page was the answer to my prayers.
It had everything I needed to make me complete.
Exchange sign-up bonuses of up to $60,000.
The biggest discounts on the best hardware wallets.
Trading fee discounts of up to 60% on the best crypto exchanges.
Exclusive altcoin alpha.
Thank you, Coin Bureau, for bringing me back to life.
On to the next question, and this is from Robert Trazovic. Litecoin dash RIP. Yeah, the good old LTC and Dash. Man, if I recall back to the 2017 times, both of these cryptocurrencies were in the top 10. And it's crazy how things change in crypto. But yeah, Litecoin, so is Litecoin rest in peace? Is it dead? I don't think so necessarily. Look, I think Litecoin's always going to have a place in terms of payments and the payments narrative. A lot of merchants, when they're onboard cryptocurrencies, is always going to be the option to accept Litecoin. It's a much faster and quicker way to pay than Bitcoin on-chain. So there's always going to be that use case for Litecoin. I'll also say that if you'll know the KuCoin lawsuit, the CFTC has been clear, and I think the SEC to some degree, well, not the SEC necessarily, but the CFTC has been clear that Litecoin is a commodity and they view it as under their jurisdiction, so it's not questions about securities. And then also, if you know from how Litecoin is mined, it's merge mined. It uses the script mining algorithm and it's merge mined with Dogecoin. And obviously everyone wants to support the Doge. And if you mine in Dogecoin, you can mine Litecoin at the same time. So we'll always have miners on board ready to support the network. So yeah, and they recently had an update to their wallet. So there's still dev activity taking place. So I wouldn't say necessarily Litecoin is rest in peace, but it's sitting at the 18th market cap rankings. And there's nothing to say that it can't continue to fall, given just how things are going with all the other layer ones that are vying for the market cap rankings. Dash, unfortunately, I will have to say NGMI. Yeah, it's now ranking at 185, which is just mad. But yeah, I don't think much is going on in the Dash ecosystem. I remember it was pretty interesting back in the day where they had this concept of both proof of work and proof of stake, and you had these master nodes. You could stake to a master node, and you could be part of the governance as well. So they did implement some interesting technology, which is still being used through to today. But I then think also they had issues with their delistings because they tried to say that they can be a privacy coin as well, even though it wasn't the best privacy coin compared to the likes of Monero, Zcash. And then they were also lumped together and always delisted. So, bad mistake there. They rebranded, didn't work too well. So yeah, no, I don't think it's necessarily going to make it. Unfortunately, I think it will continue falling. And sorry to any of you guys still holding Dash there. Maybe I know you're holding on to the hope, but remember that not all market cycles will lift all those old boats, and some old boats are at the bottom of the sea, and they're the Titanic of the crypto market. Cool. So that was Litecoin and Dash. Next question is from Augustin Hossera. And can I just say, this guy is he always submits like so many questions during the week. He's such an OG, always put at least 4 or 5. And I can also know, I've seen him in the Coin Bureau Discord server. I think he's a Coin Bureau member as well, Coin Bureau Club member. So Augustin, well, thanks for being a loyal member and always sending as many questions as possible. And naturally, if you send so many questions, we're going to have to select them. So I love your questions all the time, mate. So thanks a lot for that. Anyways, he's asking, DYOR AIOZ and no max supply. Question, red flag. Yeah, it's interesting. So the question here is, obviously, is a coin that has no max supply a red flag? Well, firstly, I've got to state, obviously, that the Coin Bureau has invested in AIOZ. It's an AI cryptocurrency. We're bullish on it. I spoke to the founder, super smart guy. They're building a deepen an AI project that's going to be focused on streaming, decentralized storage, decentralized compute, and also this new narrative of decentralized AI and AI agents. So that's why we invested in it. Really exciting project. But now more intently focused on the no max supply. It's not necessarily a red flag per se, because there's many cryptocurrencies out there that don't have a max supply. And it's not necessarily whether a coin has a max supply or not, but rather, how do the tokenomics look? What's the circulated supply looking like? How much of it is out there? Remember, Bitcoin has a max supply, 21 million, but there's a concern, of course, in 100 or so years, what's going to happen if you hit the max supply? Are there still going to be miners who are going to be incentivized to support the network? So that's a concern that obviously people have, and that's not necessarily a concern for cryptocurrencies that have protocol inflation that always is going to emit something to the network, be they validators or miners who are going to be supporting the network. So it's not necessarily a red flag from that perspective. So like I said, you need to think about it. ETH, Sol, they both don't have max supply. Ethereum previously has also entered periods of deflation because the burn has exceeded the issuance, which obviously deflation is even better than inflation from the perspective of potentially sound money. So that's an important consideration. In terms of AIOZ tokenomics more specifically, they've got inflation right now about 8%. It's going to fall by 1% each year till reach a terminal inflation rate of 5% in 2026. So that's 5% that will continually support in the network. 50% of the inflation is going to go to validators and the other to the treasury. And then, of course, there's also the token burns going on, right? So 50% of the fees on the AIOZ network are going to be burned. And the other 15% is going to go for other revenue generated for other dApps, etc., built on top of it. Also, point to point out is that nearly all of the supply is out there circulating right now. So there's no more vests coming in, so no one's going to be dumping tokens and impacting the price. So that's basically it. You should just not max supply, don't look at that specifically. Look at the tokenomics in totality. Look at the inflation rates, look at the token unlocks, and look at what are the dynamics going on for the use cases and utility of the cryptocurrency. And then, that should inform your decision from a tokenomics perspective. Okay. The next question is from Skinny _Psy or Psy. And he's asking, is proof of work blockchain dead? Why do we only see proof of stake cryptos or projects? Yeah, that's a good point. We haven't seen any proof of work blockchains launch recently, not that I know of. And I think it's a good point because at the end of the day, there's two concerns that people have with proof of work. One is, of course, whether it's a concern or not. I mean, obviously, there are the questions around environmental impact of, having to mine content as a cryptocurrency scales and as more miners are needed to support the network, you obviously need more electricity demand. And this is a whole FUD that's created around the Bitcoin narrative. And look, obviously, right, this is FUD because there are so many other things that use electricity out there that use way more than Bitcoin, and Bitcoin can be mined inefficiently. We've covered many videos on this, and you can take a look at that and why it is FUD. But the point of the matter is it is not really as scalable as proof of stake because you have to go and mining difficulty is going to increase. More miners are going to need to be bought, more electricity is going to need to be used. Whereas with proof of stake cryptocurrencies, from a infrastructure perspective, it's mainly just running nodes and running on servers, right? So essentially that's already out there and it can be scaled a lot easier than a proof of work cryptocurrency. So yeah, I think that's part of the reason why most of these cryptocurrencies are now issuing as a proof of stake or variants of proof of stake. And there are some other cooler ideas around consensus mechanisms. I think I mentioned last week something like Berachain, which is proof of liquidity, and a few others. But at the end of the day, proof of stake or a variant of it, delegated proof of stake, etc., essentially using stake and nodes using your stake as a method to create consensus and slashing as a penalty. That's probably likely going to be the one that most cryptocurrencies are going to gravitate towards in the future. Okay, and this is the next question is from Zombie Faha. And he's asking, ETH has been left behind on BTC pair. When will it catch up? Next 1 to 2 months, maybe? Yeah, it's been a really tough time for ETH, hasn't it? I mean, for one, there's the question around, are these ETFs ever going to see the light of day, at least this year at least? So obviously the deadline is May for when these ETFs will potentially be issued or denied, and then there's going to be court case back and forth potentially. Polymarket predictions has the chances of this at only like below 20%. The Bloomberg analysts also have very low. The Bloomberg analysts, the ETF analysts also have this at a very low probability, below 30%. And then there's also JP Morgan, who came out yesterday and said that, yeah, it's pretty unlikely we're going to see these ETFs being issued this year. And then, of course, there's the issuers themselves that have been making statements. About a week or two ago, Matt Hogan from Bitwise came out and said, actually, guys, let's be honest. It's not the time for these things to launch right now, to be honest. There's not that much demand for it. The markets just digest in the Bitcoin ETFs. We'd prefer if the SEC delays it out till December. And then there was also the Van Eck analyst who made statements that many people had been making before, is that prior to the Bitcoin ETFs being approved, there was a lot of back and forth between the SEC and these issuers, concerns, and requests for comment, that kind of stuff. Whereas now it's basically been dead silence. So it doesn't seem like the SEC is willing to engage. And then there's also the point around the SEC now is questioning whether the Ethereum Foundation, or potential questions the SEC potentially looking into the Ethereum Foundation for ETH being a security, which is obviously weighing on ETH's price on the one hand, but also I believe it was Laura Shin's podcast a week or two ago where she had some lawyers on, and they were saying, they were speculating that this was an evidence gathering exercise by the SEC to basically get as much information about the Ethereum Foundation prior to the May deadline, so that if they are going to be sued and preparing to be sued, they've got all the evidence. Kind of like bad faith move. I mean, given today's SEC, I'm pretty certain that seems to be a reasonable read of the situation. So that's all been weighing on ETH's price. The chances of ETF being pushed out much further on towards December. And there's just the fight around the SEC. And it seems like a lot of the Denkun upgrade came, and it was a lot of excitement for what impact it had on fees on the layer 2s, which there was a big impact. And there's a lot of excitement around what's going on in Ethereum layer 2s. But then this just raises the question and the debate around the completely monolithic blockchains like Solana or Ethena or Avalanche, etc., versus these blockchains like Ethereum, which will just act as a massive settlement layer for all of the L2s, where all the value will be on the L2s. There's that debate going on. So that's a lot of the FUD that's been driving ETH down. So that's why it's been losing ground towards Bitcoin and a lot of other altcoins as well. Will we catch up in the next 1 to 2 months? I don't think it will catch up to Bitcoin in the next 1 to 2 months. There's too much going on in the Bitcoin space. There's still a lot of value and flow coming in from the ETFs. And short of something really big moving onto Ethereum in terms of like narratives or news or updates, I don't think we're going to necessarily see that rotation into ETH from Bitcoin. So yeah, that's unfortunately, I don't want to be bearish. It's just a short-term view. Still long-term still long-term ETH bull, but in the short term, there's a lot of headwinds facing Ethereum. Okay, next question, and this is from Ifari 007, and he's asking, could we really get to 2% inflation target in the USA? Yeah, seems like a really ambitious target right now, especially because we had the inflation numbers last week, CPI. It came in at 3.5% headline CPI versus 3.4% expected, and 3.8% core versus 3.7% expected. So still above expectations. So obviously, this is the question now, are we going to have, it's crazy to think that in terms of I'll also share something that I did on a Twitter post, where basically the moment after those inflation readings came out, the probabilities, according to the Fed Watch tool, of a rate cut in June fell from something like 55 or 60% to like 20%. So it was just like the market immediately adjusted. And now there's many people who are wondering, well, are we going to even see, when are we going to see the pivot? The latest inflation forecasts are looking at, or the latest interest rate forecasts in terms of like, according to interest rate futures, as well as if you use other tools like Polymarket's decentralized betting, It's probably around September is when the probability increases above 50% of any sort of pivot. And many people who thought it was a surefire thing, we're going to have at least 3 interest rate cuts this year. It's now not a question of, when, but more potentially if. So there's many people who adjust their expectations around the impact this will have on Fed policy. And I can imagine that Jerome and his friends, well, they were breathing a sigh of relief, high-fiving all the time at the beginning of the year when it comes to inflation, and also the impact they haven't had any sort of downturn in economic growth or on the labor market. So they were trying to do that soft landing. It seems like that soft landing is being called into question now with some slight turbulence on the approach. Yeah, I guess it's also the question around now what's driving this potentially. And the main concern is it's the relatively sticky components of the inflation reading. So in this case, it's services. And there's actually a reading that's called the supercore reading, right? Supercore, which excludes things like housing, energy, and food. And it was at 4.8%. This most recent reading, which is at 11-month high. So these other services, which is basically home insurance, auto insurance, taxes, all that kind of stuff, it's still very high, and this is very sticky. And this is not as sensitive to monetary policy interest rates as many of the other components. So this is what's keeping inflation now above the target. So yeah, I guess the question is that the Fed is struggling. Obviously, they're going to keep rates as they are. Now the market's predicting till at least September. And the question is, what are they going to happen first? Are we going to start seeing inflation coming back down to that 2%? Or are we going to start seeing the labor market deteriorate considerably to the extent that they're going to be forced, the Fed is going to be forced to ease? But yeah, so more directly, could we really get to the target? I don't know. I've seen lots of analysis out there that is potential of a higher for longer in these interest rates. Maybe the Fed should adjust its target up a little bit. But right now, I don't think the Fed wants to lose any more credibility. Remember, they let inflation get to where it was because of all the policies and pandemic, etc. So I don't think they're going to let go of that 2% target as easily as you'd want. But of course, sticky prices aren't going to care what the Fed says right now. So yeah, that's I don't think we'll see it anytime soon. But a lot will depend on what happens over the next few months. On to the next question, and this is from Oscar Abunza. And he's asking, any updates with AVAX ecosystem? Yeah, well, I mean, we obviously did a main channel video on Avalanche about a month or so ago, and that was relatively positive. I'll also state that I hold Avalanche in my personal portfolio, and I'm bullish on it. And there's lots of exciting things happening on Avalanche, and more particularly as a result relates to what's going on with all these subnets that are being issued for numerous different use cases, but specifically for gaming, which I'll come to in a bit. But why are subnets important? Obviously, because in order to run a subnet, you have to stake AVAX, about 2,000 AVAX to stake it, and this is locked up. And remember, there's a 720 million AVAX total supply. So that's going to naturally mean less AVAX on the market, price positive. And of course, if the subnets choose to use AVAX as the native gas, this is all 100% burned, right? So then that's going to lead to obviously more price positive in the longer run. There's also been a lot of whales who've been accumulating Avalanche more recently, or AVAX more recently, those who accumulate between $1 to $5 million worth of AVAX. It's the highest it's been for quite some time, and that means there's been at least $2 billion worth of whale accumulation in AVAX over the past month. Now, when it comes to games, as I say, Avalanche and AVAX, and Avalanche seems like it's becoming the premier gaming blockchain with these subnets. Two really exciting games, which we've talked about before. One of them, of course, was Shrapnel. We've mentioned that a few times in the Discord server and on the channel. And another really exciting one is, of course, one that everyone's looking forward to, and that's the game by Gunzilla Games, Off the Grid. Now, full disclosure, of course, Coinbureau's invested in a pre-sale of in Gunzilla Games Guns tokens, and as well as NFTs. But that full disclosure aside, what is Off the Grid? Well, it's a cyberpunk battle royale shooter game that everyone is super excited for. If you've got to see the gameplay on this thing before it comes, that's out there on YouTube. It's uses the Unreal 5 engine, and it is It's got like 150 players within it, and it's developed by a team of like 200 game developers in Europe. Game developers themselves who've worked within game development. So itself actually could be a game that people actually want to play, devoid of any sort of crypto tokenomics, and it's coming out on PS5, Xbox, and PC as well. And then, of course, you've got these gun tokens. These gun tokens are in-game currency, and you've also got NFTs. And speaking of the NFTs, they just recently made an announcement that they've entered a partnership with OpenSea to launch and integrate within OpenSea, where these native in-game NFTs can be traded exclusively on OpenSea. This is like one of the first times OpenSea has done this, and it's a really big partnership for them. So obviously, this is exciting for everyone who's going to easily be able to trade these NFTs. But the point of the matter is that obviously this is bullish for if this subnet is all demand for building on Avalanche, and it's not just gaming, of course. There's also RWAs. The RWA issuance is strong on potential subnets. So the more demand there is to issue on Avalanche and issue in these subnets and build on these subnets, the more bullish it is for the ecosystem. I'm bullish on Avalanche. They're also looking at investing in Memecoins, bringing Memecoins to the ecosystem through their Avalanche ecosystem fund. So yeah, a lot of exciting things happen on Avalanche. That's why I'm bullish. That's why I hold it. And that's my Avalanche shill for this video. Okay, the next question is from Stefan Kugel. And he asks, will there be a crypto god coming from the heavens to punish all of these scam token creators? And that's a thoughtful question. I wish there was, man, like some sort of a heavenly Satoshi that smites them with lightning every time they want to launch a rug pull. But unfortunately, I don't think so. But I am a believer in karma, a strong believer in karma. And those who do bad and cause harm to others, the world, what goes around comes around eventually. And also, I will say that, the long arm of the law goes around the world much more quickly than anywhere else. And you got to understand that everyone thinks they could get away with some sort of rug pull or scam token launch or fraud or things like that. Let's not forget that the blockchain is completely transparent and there forever. It's immutable forever. Whatever you've done, any sort of nefarious wrongdoing on the blockchain, it's there forever for them to discover. And if they may not be able to do it now because the technology and tools isn't good enough, maybe in 2 years' time, they've got the most advanced blockchain auditing tools developed by the likes of Chainalysis, etc. And they can easily track down any of this nefarious activity. Let's not forget what happened to the guys from the Bitfinex hack, as well as James Zong, the guy who hacked the Silk Road. Years, 4, 5, 6, 7 years, they got away with it. No one knew anything about it. They lived their best life. And, eventually, like I say, the long arm of the law came back to grab them. Avi Eisenberg, the guy who hacked Mango Markets, and his very profitable trading strategy. I mean, he's now sitting in a trial in Manhattan, potentially looking at 20 years. So, yeah, I mean, at the end of the day, and also it's the question, even if you get away with it, you have to live with the knowledge that potentially you could get a knock on the door one day, right? And is it worth potentially what you think you're gaining from being a scam creator and defrauding people to potentially getting that knock on the door and having your life changed forever? I wouldn't want to live like that. I don't think any of you guys would. So, I think that I'm not too worried about, whether there is going to be justice for them. I think it can happen. And even if it's not a nice way to live. Have that stress over you. Crypto is stressful enough, guys. The last thing we want to be doing is sitting there stressing about whether we're going to get picked up by any, 3-letter agency at any point. So, yeah, law is the crypto god that will come down on them eventually. Next question is from Edugon B, and he's asking, is TVL over FDV, or the TVL to FDV ratio, a good measure of how under or overvalued a project is, or any other metrics? Yeah, that's interesting, because I think that it's useful when it comes to first of all, when it comes to measuring a cryptocurrency's value, it's not as easy as measuring a company, right? Because it is, of course, a decentralized network. However, there are some measures and ratios you can look at, which kind of analogous to looking at a company. So in this case, the TVL to FDV, or the total value locked to fully diluted value, is a measure and look at basically some sense of book value to market value. So if you guys in the equity space, you like to analyze stocks, book value to price or something like that. And that's basically because TVL is the protocol, the total value that's locked within the cryptocurrency ecosystem. So it's kind of like the balance sheet of the protocol. It is a good metric, although I will caution that there's two things to do with it. One is, of course, the TVL can easily be inflated by incentives, and TVL is very fleeting. Like it can come and go very quickly. People, especially when you've got liquidity farmers who incentivize through points systems, etc. And also, so that's on the TVL side. On the FDV side, well, sometimes you got to think about the fact that we just talked about tokenomics in the other question, right? Like if there isn't a lot of the supply that's out there because they're still locked up or something, it's not really driving price right now. If they've got a long vest out or something, it's really what impacts on the price right now in terms of market dynamics is the circulating supply. But that being said, I still think it's a great measure for balance sheet to, price. Another one you can look at, of course, is something, if you want to think about it from a perspective of revenue to price, is something like transaction revenue generated in a year over market value or over FDV. And that's just a measure of like the price to earnings ratio, although if you want to look at the FDV over the revenue generated, that's price to earnings, like you have in a stock, how much revenue is generated within this protocol compared to how much it's actually worth, how much the market values it at. So that's another interesting one to look at. There's a few others. I will actually, if you guys want to know about a good tool to look at or a good website, it's Token Terminal. And they've got this section, which is basically protocol financial statements, right? And they look at all of these other metrics, then combine them and look at ratios and ratio analysis. So for all those analysts out there who like to do their deep dives on protocol fundamentals, that's a website you guys can look at. But, and I think I mentioned this before, although these are useful tools and they are good, I would also caution that sometimes cryptocurrency fundamentals can go out the window, especially in crazy market conditions. You want to believe, like Buffett, all value comes back. And in the long run, everything is it's like a weighing and a voting machine. Like, in the short run, the market is a voting machine. In the long run, it's a weighing machine. You hope that in the long run, the weighing machine will outweigh the voting machine in market dynamics. But crypto is a crazy place. So yeah, just caution on that. But those are the metrics you can look at. And it's good to look at some of these because it gives you a good sense of which protocol is providing more in terms of revenue and asset value compared to their price. Okay, and the next question is from QP Polo. And he's asking, hello from Turkey. Will you hire me as an intern or assistant? I love crypto and Coin Bureau. Well, QQ Polo, thanks a lot for that. We love our fans too. But we actually don't need an intern right now. However, if you are looking to work for the Coin Bureau, we still do have an open position for a social media analyst to join us here in Dubai, of course, and work with our lovely team. And I think that if you guys are passionate about cryptocurrency, if you're a hard worker, if you know about social media and you're willing to work and relocate to Dubai, we'd love to hear from you. I'll leave a link in the description, of course, to how you can apply for this role. And we've got lots of other open roles opening up, so keep an eye on our careers page. And there's nothing better than hiring our fans because some of the best hires we've had over the past few months have come from people who are long-time subscribers, long-time fans. And we know, of course, that they know who we are and what we do, and they're passionate about crypto. So that's how you guys can apply to work for us, and if you want to. But no, unfortunately, no intern roles, QQ, but QP. But we will be taking you if you know about social media. Okay, the next question is from Fadil Lahi. And he's asking, do you guys own any NFT or meme coins, except Guy's Baby Dragon? Yeah, if you guys don't know the context here, Guy, about 3 weeks ago, a month ago, you will have seen if you followed other Q&As, etc. Guy bought some dragon-themed meme coins. And his thesis was that it was the Chinese Year of the Dragon, obviously. Everyone's going to be talking about it. And, we know Chinese people like to invest in cryptocurrency and be speculative with it as well. Maybe a dragon of some description could be a good investment. I think he bought Baby Dragon and Silly Dragon. And initially, this didn't actually work in terms of the thesis, how he played out. He didn't see any sort of massive pump because of the Chinese New Year in terms of the Year of the Dragon. But it actually did pump 2 weeks after. So he still closed out and made a trade there. So top tier marks to Guy for being trader of the week there on his meme coin thesis, although it worked in the end, right? And that's all that matters. But in terms of, are we investing in NFT or memes? No, not NFTs. However, on the meme coin side, Got a little bit of interesting alpha for you guys. And you probably will have seen because on Friday, we had the exciting launch of this new coin, Foxy Memecoin. Right now, full disclosure, we invested in the pre-sale of Foxy tokens as well. We're holding. It's an exciting project. It's not just a meme coin, it's a culture coin, right? Then it's going to be built on this Linear ecosystem. The Linear, obviously, if you guys don't know, Linear is the new layer 2 solution by consensus. And Foxy is going to be the mascot of the Linear ecosystem. And it's actually pretty interesting because they had airdrops going on. They had at least 5% of the total token supply being airdropped to MetaMask swap users, at least 100,000 MetaMask swap users. And this is actually a good point because 3 years ago, we did an airdrops video on CoinBureau that speculated on a lot of things. In that video, we obviously, one is we speculated that you're going to potentially have an optimism and an arbitrum airdrop, which of course happened in the 2 years subsequent to that. But we also speculated, look, what about MetaMask? Is there ever going to be an airdrop of some description to MetaMask users? And we said probably the best thing to do if you want to potentially get any options on that is to use MetaMask Swap, because that's one of the only ways that they can register your address on them, have interacted with MetaMask smart contracts. And lo and behold, here we see almost 3 years later, if you'd been using MetaMask Swap, you would have been eligible for this airdrop. And also, it's important to point out that it's not based necessarily on volume, but total amount of transactions. So if you've been using it over the period of time, it's not necessarily going to be favorable to only those who come late on and just started pumping a lot of volume through. Those who'd been long-time users are going to be rewarded as well. So yeah, that was what happened. It's airdropped on Friday. And I think Guy also got some on his MetaMask swap. But then there's also going to be 1% of the airdrop went to OKX, first come, first serve users who are completely verified. And the other 19% of the token supply is going to be used within the Linear ecosystem to help Linear builders and support Linear builders and support the growth of that ecosystem. So it's exciting because, first of all, like we say with meme coins, it's like you have to find a lot of these meme coins have moved from layer 1 to layer 1. You've got to find the new layer 1 where these are going to be popping off. Foxy is not just like any sort of meme coin. I think that they've obviously got a long-term plan for it, and they want it to become the center culture coin and mascot for growing out this Linear ecosystem. And I know personally that there's a lot of exciting ideas and plans in the roadmap, and there's some big backers behind it. It's not associated with consensus anyway, but I mean, it is obviously not just your typical meme coin. So yeah, I mean, like I say, I think that's a really exciting meme coin. I'd keep an eye on it. It's launched on OKX and Bybit, so it got out of the gates listings, which is also very important. And yeah, it's cool. It's cute. Got a great Twitter game. It's Foxy, man. We've got to move beyond the dogs. Got to find a new animal that's going to be our mascot, and it's a cute MetaMask fox. Okay, cool. And now we got the final question, and this is the most important question of them all because it gives me an opportunity to shill my supplements. And this is from Glasses Jack, and he's asking, Nick, what's your favorite pre-workout? Mine is Monster Ultras. Yeah. I mean, I actually do really like Monster, and when I used to live in Toronto as well as London, and also when I visit SA, I buy Monster, and Monster Ultra is great. But obviously they don't sell it here in Dubai or the UAE, so I drink C4 here. And if you'd seen on my Twitter post a few days ago, as well as more regularly, we've been, Jess is also a big C4 fan. I bought us like massive stacks of my monthly or 2 monthly supply of C4. And but that's actually not my preferred pre-workout energy supplements. I like the powdered versions. And there's 3 that are my favorites right now. One is the C4 powdered pre-workout drink. And then there's Caged, but spelled with a K because it's more hardcore. And then Pre-Gym, but spelled with a J because you want to get juiced. No, I mean, so those are the supplements I drink right now in the mornings. And then I mix it up with the C4 sometimes. But I do kind of feel a bit guilty because after, the teams, talked to me about it, and I was like, it's pretty, I'm a temple of health. Like I count my calories down to the last calorie. I don't drink. I gym every single day. And here I am consuming this copious amounts of pre-workout supplements, which are jam full of taurine and caffeine. And I do wonder, am I lessening my longevity even more? I mean, being in crypto is stressful enough, but is it consuming these supplements really lessening that longevity even more? So yeah, but again, we're in crypto. Crypto never sleeps. Got to be up early, and I got to get my pump in before I hit the gym to get those gains. But I mean, I'd love to hear from you guys if you know of any other alternatives that are more healthy options. If there's some sort of a matcha-based pre-workout which can give me the same kick as pre-gym or caged, I'd love to hear about it. And that's the Q&A for today, guys. Thanks again for sending in these amazing questions. And if you guys want to ask your questions, you know what to do. Instagram will be linked to down below. And we ask these to you to submit your questions throughout the week. And as Augustine has seen, the more regularly you ask these questions, the more you will get answered. And obviously, if we can't answer the question during this week, we'll usually come back to them. We like to go back through previous questions as well, so we can try and get to everyone's questions over time. But yeah, that's it for me and Sam here today. What's that, Sam? Yes, we know you're sorry that people are angry at you. Yes, I know you wish things could have been different. Anyways, guys, that's it from me and Sam. Have an amazing week further, and we'll speak next week. Cheers.